floor. Let us get to the floor show traders. All right, Tom, you're a nicey trader. If you own the newly invited names, you're absolutely thrilled. But if you own ExxonMobil or Pfizer, Raytheon, blame Apple because its 4-to-1 stock split is what affected these moves, correct?
That's correct. Liz, the 4-to-1 split was going to take the tech weighting of the Dow Jones Industrial Average from 27.6% down to 20.73%. So they had to find a tech stock to fill that gap because it's a price-weighted index. And the thing about the Dow Jones Industrial Average, it's more symbolic. This is what Main Street looks to for confidence and for the health of blue chip companies. The majority of assets under management are indexed to the S&P 500. So while it's symbolic, they did choose Salesforce. And you said, as far as your dream stocks for the floor traders, I don't know if I would have chosen Salesforce per se. It's a bit smaller. It's not quite a blue chip stock at $185 billion market cap. I might have looked to something more like Facebook, which is $750 billion market cap and is also growing at a fast clip.
Why do you think they didn't pick Facebook? I mean, this is interesting to me.
Yeah, they actually didn't pick Facebook because of control issues. So Mark Zuckerberg owns too much of the voting stock, and it was the same issue with Berkshire Hathaway, which would have been my second favorite choice for one of the replacements. Warren Buffett owns too much of that stock as well. So they had to choose Salesforce and Amgen and Honeywell because they had dispersed ownership.
Phil, give me your ideas of what you would have thought they would switch out. And you as a longtime trader, this shift of 3 in, 3 out, I think it came as a surprise to a lot of investors.
It really did. You know, the Dow is one of the stalwarts. You don't see many changes. I mean, I'm still shocked that General Electric got kicked out, right? That's been there since the beginning. You know, you're kicking out all the original members out of this club here, and it's amazing. I mean, I feel bad for ExxonMobil. I mean, does that mean big oil isn't big anymore? We can't call them big oil if they can't even stay in the Dow Jones average, for heaven's sake. But you know what? I'll tell you what. You know, if we had to kick one in and put one out, I think I would have said, Intel, you're out of here. Take out Intel. I think they've been very disappointing in a way. You know, they're buying back their own stock. I don't think they're being very inventive in this new world. And I would, replace it with the Broadcom. Broadcom, I think, is better reflective of the new world that we're living in because it covers everything. It covers gaming, artificial intelligence, and data. So I think that would be more reflective of what's going on for the overall blue chip space. So Intel, I think, is not as reflective as it used to be. It definitely used to be when everybody was buying their PCs, and that was a real barometer of what was going on in the economy. I think that's changing a lot, and I think Broadcom's a better pick for that.
Yeah, although it used to be Avago, and there's some foreign ownership issues there we've talked about in the past. So, you know, in this very political and heightened sensitivity era, they're looking at everything before they add anything or take them away from the Dow. All right, Phil, Tom, great to have you. Thank you so much.